Palantir Technologies, NVIDIA, Salesforce, even Apple. You know the big players and the big winners and the big tech and AI revolution. But if you've been listening to my next guest, you know he gave you a heads up about their potential well in advance. This tech sector specialist has called this a champagne moment for the industry sector, and he suggested there's plenty of jet fuel for stocks in the group. His name is Dan Ives. He's Managing Director and Senior Equity Analyst at Wedbush Securities, and I'm very pleased to have him on for this MoneyShow MoneyMasters Podcast episode. Dan, let's start with the big picture. I mean, last year was a great year for many tech stocks and obviously the NASDAQ as a whole. So far in 25, it's been a little bit of chop in the market. So where do you kind of see things standing in the tech world and the NASDAQ here?
Yeah, I mean, look, Rome wasn't built in a day. So the AI revolution, like this is a multi-year build out. And I think especially with like Trump coming in, tariff talks, Fed, you're seeing a little bit of a sort of squashy market here. But our view is that it's all about where the spending is. And 325 billion of AI capex from big tech, 100 billion increase year over year. I mean, that speaks to what's going to be a generational spending, and that's why we're super bullish on tech. It is the AI revolution just starting.
Okay. Okay. It's interesting you bring that up. I know when we spoke in Sarasota in December, you kind of talked about this being a champagne moment for the sector and a lot of jet fuel being out there for the stocks. And that all kind of pertained partially, I guess, on the macro stance to the new regulatory environment and what a Trump administration would mean for tech. How have your thoughts changed, if they've changed, and if not, why?
Yeah, I think clearly, I mean, Musk and Doge, that's taking on a life of its own, right? So, I mean, in terms of like his involvement, and that's something that's actually been a bit of an overhang on Tesla. But my view is that this is all about privatization that's going to increase in terms of AI spend. And I think when you look at where more and more of the spending is going to be in the Beltway and within a lot of the agencies, it's going to be AI driven, and that's going to benefit names like Palantir, names like Amazon, names like Microsoft. I mean, if you think about where we were in December to now, I think Palantir has probably been the biggest standout, and that's really been because of what they're seeing with spending, with AI use cases. So I just continue to view it deregulatory. Maybe in near term, in the course of months, it's unsettling, but it's very bullish for just broader AI spend in the Beltway, as well as making sure regulatory doesn't get in the way of spending, especially when it comes to things like autonomous and others.
You've talked about, I saw in one interview recently that the software era is now here. Can you talk a little bit about what that means and sort of the evolution of the AI revolution that we're having here?
Yeah, I mean, it's really about these second, third derivatives that are playing out. And I think when you think about it from a software perspective, like Palantir, it started Salesforce, and I think when you look at names like ServiceNow and others, I think it shows as the use cases expand, it's really software that's going to benefit. And that's what we talk about is the software error. Because that's really what it's, if you think about the chips, the hyperscaler, that's really just the setup to what's going to be software driven spending. And I think that's what we're starting to see play out in front of us.
Okay. Also, one of your concepts has been kind of the derivative AI plays, the second derivative, the third derivative versus kind of the names that everybody knows, like NVIDIA. You mind talking about that for a little bit?
Yeah, and I mean, and look, second derivative, even on the software side, like the Mongos, the Elastics. I think when you look at names like I'd say Snowflake and others, but it really just starting what I believe is going to be the software and even some of the infrastructure. When you look at names like Aqua, which is a nuclear energy build out, more and more data centers get built out. I mean, for every dollar spent on a NVIDIA chip, it's $8 to $10 multiplier across the rest of tech. So that's why when you're thinking about AI, can't just focus on 7 companies. It's fully derivative, whether it's on the consumer or on the enterprise.
We all obviously had a lot of this sort of DeepSeek hoopla and everything going on with that. I'm kind of curious what it means or really doesn't mean for big tech. And I'd say for both the users and the investors in AI, as well as the providers of the tech that sort of enable it.
Yeah, I mean, look, I viewed DeepSeek from the beginning. Like, first of all, models are going to get cheaper, precipitously cheaper, whether it's Chinese, US, whatever it may be. And that's actually a good thing for just broader CapEx build outs, more GPUs, more focus on use cases. Now, DeepSeek, I think the initial view in the panic, NVIDIA down 17%, is the view like you don't need GPUs. If they could do it for 6 million, why these companies spending hundreds of billions? That's the wrong take, right? Because models, it's bread at the restaurant. In other words, like that is not really what the revolution. It's really more about data, infrastructure, use cases at huge scale. But I think what DeepSeek shows, innovation is going to continue to increase. But some of these panicky moments, I think as an investor, you have to like not right away, like, kind of take the worst case. I think you got to let it digest in terms of ultimately what it means. Because I actually think it's actually a bullish thing relative to more GPUs ultimately that are going to be used.
Um, um, what about some of the earnings reports we've seen so far this season? What are a couple of the read-throughs that you're getting from what companies have had to say?
I mean, I think it's really the cap back some big tech. I mean, that's super, super bullish in terms of what that means. I think when you look at overall earnings season, very strong in terms of overall consumer advertising spend. We saw with Meta, and others. Maybe some choppiness in terms of capacity issues like Microsoft and others that they saw. But what this really is laying out for is like this next phase of AI spend is now underway. And I think big tech earnings seasons actually just embolden that view. And look, we're gonna have you could have sell-offs, but my view is like tech stocks still go up 20-25% this year because we're less than halfway through this tech bull market.
Yeah. I've got to throw a name or two out there. I mean, you've kind of talked about Palantir as previous as being the Messi of the sector. Obviously, had huge momentum. You've talked more recently about sort of the bigger names like Salesforce. Anything that you want to update on those names, or do you have kind of new favorites that you think could be the next Palantir?
Yeah, no, look, those are two of our favorites in terms of like software plays and ways. But I think Palantir, the way they've executed, Cop and Palantir really kind of showed where everything's heading. Salesforce, I think Benioff and the team are just starting to sort of monetize this next phase. I think you also look at names like Mongo, Elastic, names like Innodata, Pegasystems. Those are just examples, whether it's small mid cap names that I believe kind of second, third derivative that are going to benefit.
Okay. Uh, I do have to bring up one big picture issue that I kind of thought of, and that's the tariff impact in terms of what it
Mhm.
might mean for supply chains and semiconductors and so on. What are your thoughts there?
I mean, when you get off the Florence train station and the person comes up and you say leather jacket's 400, did you pay 400? You probably end up paying 200. But what's your first bid? 100. The point is like it's negotiation. And that's what this all is. Tariff negotiations, like especially when it comes to China, like our view is like, look, US, Mexico, I think a lot of that sort of subsides when it's all said and done. When it comes to China tariffs, we'll have some headline risk, but I don't think that it significantly impedes the AI revolution. I mean, that's sort of our view. I think it's gonna go through it's gonna take 6, 9 months. You're gonna DC and Beijing, obviously, Trump administration getting them to the table. But I don't very important, I think when it comes to AI revolution, I don't view it as like a black swan impeding event in terms of growth for NVIDIA and others.
Yeah, fair enough. Anything besides, AI, obviously it's been the big story. Are there any kind of other trends in tech that you think are important for people kind of to know about and what it might mean for various investments in the sector?
I think maybe cybersecurity, just like more and more as more of these models get launched, more moves to the cloud, the need for cybersecurity, like what that spending environment looks like. I mean, I think that, and that's names like Palo Alto, CrowdStrike, Zscaler, or CyberArk. I mean, those would probably be like the other maybe subset of tech that I would be focused on, especially, and it's one that we're bullish on in terms of 2025.
Okay. I hate to, I don't like think of myself as a Debbie Downer, but I do try and be a realist and ask, is there anything out there that would kind of derail your bullish and very strongly bullish base case? Anything that worries you, in 25?
Look, I mean, we've always said like the most like draconian or black swan, it wasn't like Fed inflation. It was really like tariffs getting out of hand. Like one where like this actually just goes off the rails, whatever the percent chances are, for 3, 5%, you know, China retaliatory, Apple, Tesla, chips, Nvidia. I think that would be the most draconian scenario. But again, like, look, we're always gonna have risks, okay? And but it just comes down to like, if these companies execute and the capex is there and the multiplier plays out in the fourth industrial revolution, I think tech stocks move higher.
Okay. Yeah, one last question. I mean, you're going to be delivering an address at the Money Show Traders Expo in Las Vegas. It's right around the corner. And you're going to be joining us for the Money Show Master Symposium in May in Miami. Yeah, I don't want to give away the store here. And obviously, May's a little farther away. You have a sneak peek at what somebody is going to hear from you, what kind of their takeaways are going to be?
I mean, look, I'm on my way to Asia now. Like the point is like what are we hearing? Like what are we seeing from the field? What does demand look like? I mean, I think that's how we've been able to navigate and kind of maybe stay, ahead of the AI revolution. What's the blind spots? Like, what are the risks? As you're asking, like that. Those are the things that we talk about. I don't, at all the events too, when people hear me, it's not just fluff. It's trying to talk where people could actually use that for their own investing advice.
Well, listen, thank you so much for your insights. Viewers, if you'd like to learn more from Dan, in Vegas is just too soon for you to catch, no problem. He's going to be speaking at that Money Show Masters Symposium Miami, which runs May 15th to 17th at the Hyatt Regency Hotel downtown. You can also find out more by clicking the link in the video description below if you want to see the details. And don't forget to like this video and subscribe to our Money Show channel to get more updates like these. Dan, thank you again for taking some time out to chat.